Ladies and gentlemen, good day and welcome to the Bodal Chemicals Limited Q2 and H1 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be no opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ankit Patel, Executive Director from Bodal Chemicals Limited. Thank you, and over to you, sir.
Thank you very much. Good evening, everybody. On behalf of Bodal Chemicals Limited, I extend a very warm welcome to everyone for joining us today on the call today. On this call, we are joined by our CFO, Mr. Mayur Padya. I hope everyone had an opportunity to go through the financial results and investor presentation, which have been uploaded on the stock exchanges and our company's website. We will give you a quick overview of the recent developments in the chemical industry and on our company, and then Mr. Padya will walk you through the financial performance for the quarter. For industry highlights, the inflation in major economies continues to be higher level than the normal, leading to lower purchasing power with mass, which results in lower consumption at end-user industries and lower demand for our industry. Uncertainty of end of war between Russia and Ukraine further decelerated demand scenario of the chemical industry. Slow exports for textiles, leather and paper, leading to subdued performance of dyestuff over the last few quarters. European market has been slow for more than 5 quarters now, owing to multiple headwinds from rising inflation to uncertain geopolitical scenarios. US experiencing most aggressive interest rate hike, causing financial conditions to tighten, and recessionary trends continue impacting the demand. Industry expects this weakness may continue for short term, but gradual recovery is also expected. In today's environment, where Indian suppliers are emerging as preferred partners globally, we have been able to leverage our leadership position. We are India's largest integrated manufacturer of dyestuffs and dye intermediates and hold a meaningful market share in the world. Coming straight to the operational performance, overall business performance for first half FY24 has been weak, as the company's total revenue stood at 677 crores, a degrowth of 22% due to decline in prices of raw materials, as well as and margin is on account of decline in overall demand. Coming to dye intermediates, acid and vinyl sulfone prices were stable at lower level. On positive side, in first half FY24, total revenue from dye intermediate chemicals stood at 205 crores, has reported growth of 16% on year-on-year basis, and it is due to the improved volume. In Q2 FY24, acid and vinyl sulfone prices were near of rupees 420 for acid and 215 for vinyl sulfone. Volume has improved. However, margin are still under pressure due to lower realization. More than 40% of our intermediate products are used for the captive purpose to manufacture various ranges of dyestuff. Over the next few years, revenue pie from this vertical will eventually go down, and business from dyestuff will increase in favor of steady business growth. Coming to our dyestuff, end application industries like textile, leather, paper and other dyestuff consuming industries have not performed well during the last few quarters. All leading textile companies are facing global headwinds, which have curtailed the outlook of dyestuff products. The dyestuff business for first half stood at 227 crores. For basic chemicals division, about 50% of our basic chemical is captively used for dye intermediates. Though volume is optimum, however, due to the decline in raw material and finished good prices, the revenue for the first half stood at 63 crores. The revenue degrowth of 42% compared to the first half of FY2023-24. Coming to the chlor-alkali business, post-upgradation capex, the chlor-alkali business has performed reasonably well. In terms of production, achieved 16% growth in volume in first half FY24. year-on-year basis. However, due to adverse market conditions of caustic chlorine industry, revenue stood at 129 crore and has reported a degrowth of 26%. Coming to the new project benzene derivatives. As highlighted in the earlier call, our main goal is to replace imports and capture business in the pharma and agrochemical markets where PNCB and ONCB are used. We will be installing the capacity of 63,000 metric tons per annum of benzene derivatives. The Saika Greenfield project is progressing well and is expected to start by Q3 FY24. Senar, our Turkish company, has performed well, though there is global headwinds in the chemical industries and severe earthquake in Turkey in the recent past. Whereas the other industries have incurred nominal losses, in a medium to long run view, these subsidiaries will bring meaningful business. However, in short term, we are expecting a modest performance. We have been moving up the value chain and working relentlessly towards diversifying the business from our core dyestuff and dye intermediate business to other specialty chemical products like benzene derivatives. Once we have decent visibility of demand for our product portfolio and new site is stabilized, we will restart the sulfuric acid project. While the global growth and demand is impacted, growth momentum in India is strong. We will expect chlor-alkali business will contribute meaningful business in the coming years on back of a technology upgradation. We foresee demand for caustic soda to remain healthy from FMCG, textiles, and paper industries. Since very few players have a presence in North India, we will have a competitive edge to a certain extent. Manufacturers and exporters in India are having a challenging time managing the overhead cost. Over the years, chemical industry has seen a transformation. Management is taking measures in terms of scale, cost, integration that will help to sail through this tough time. Thank you, and now I hand over the call to Mr. Mayur Padia to walk you through the financial performance.
Good evening, everyone. The overall performance of the company has been muted for the quarter gone by. Our standalone performance for Q2 FY24 is as follows. Total revenue for Q2 FY24 stood at rupees 334 crore. EBITDA stood at rupees 28 crore in Q2 FY24 with a margin of 8.5%. Net profit for the quarter stood at rupees 1.03 crore. Our standalone performance for H1 FY24 is as follows. Total revenue for H1 FY24 stood at rupees 663 crore. EBITDA stood at rupees 56 crore. Net profit for the half year stood at rupees 2.1 crore. Our consolidated performance for Q2 FY24 is as follows. Total revenue stood at rupees 336 crore for Q2 FY24. EBITDA stood at rupees 29 crore for Q2 FY24 with a margin of 8.8%. Net profit for the quarter stood at 1.24 crore for Q2 FY24. Our consolidated performance for H1 FY24 are as follows. Total revenue stood at 677 crore against rupees 8.69 crore for H1 FY23. This includes export of 27 crore and domestic sales of 73%. EBITDA stood at rupees 60 crore in H2 FY24 and degrowth of 31%. Net profit for the half year stood at rupees 3.45 crore against rupees 32.79 crore of H1 FY23. H1 FY24 performance of the key subsidiaries was subdued except for Senar. Segment-wise performance on a consolidated basis for the H1 FY24 are as follows. Dyestuff revenue stood at rupees 227 crore. Dye intermediate revenue at rupees 205 crore. Basic chemical revenue at rupees 63 crore. And chlor-alkali revenue stood at rupees 129 crore. Total production volume on a standalone basis for the H1 FY24 are as follows. Dyestuff reported 6,834 metric ton. Dye intermediate reported 10,492 metric ton. Basic chemical reported 1,12,034 metric ton. Chlor-alkali stood at 38,094 metric ton. Our net debt at about rupees 800 crore at the end of H1 FY24 on a consolidated basis. With this, I conclude the presentation and open the floor for question and answer and further discussion.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Khetan from SMIFS Institutional Equities. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, first question was onto the dye intermediate side. Sir, from second quarter of FY23, wherein we had reported the weakest volume for dye intermediate of 2,200 tons. From there, sir, we have witnessed a very swift improvement in volumes to around 5,000 metric tons for dye intermediate. So, sir, this improvement in volumes of dye intermediates on quarter-on-quarter basis and YOY basis, so despite the Chinese competition, which are the major players into this business, have we not witnessed any sort of headwinds like increasing imports from China, which is impacting volume? But despite that, your numbers continue to remain good onto the volume front in dye intermediate. If you can share some idea as to what has led to this improvement.
Hello. So if you look at it at year-on-year basis, then last year, FY23, the same quarter, it was the lowest quarter in terms of dye intermediate manufacturing for us. In recent few years, that was the worst time that we had experienced in the dye intermediate business. And that is why the volumes had really gone down in that quarter last year. But this year, the volumes, because we are looking at it in a year-on-year basis, that's why the increase is 100%. And the volumes look really solid. But if you look at quarter-on-quarter basis, then compared to June quarter, the volumes, the increase is not that much. So that is the reason why you see a big increase. So I feel that the volumes are quite normal, where now due to the raw material cycles, getting in a comfortable zone, we are now able to at least go for our manufacturing volumes. So that has been happening in the last couple of quarters.
Sir, on quarter-on-quarter basis also, there is almost 18% jump into the dye intermediate volumes. So what is the major reason for this jump? Is it because of the good demand or lower imports from China or higher export of dye intermediate? I believe so. This is a domestic product. So what is that fundamental factor which is leading to this improvement in volumes?
Basically, the improvement is all because of the stability that we have experienced. So in September quarter was definitely a little better in terms of overall demand. And more importantly, the basic chemical cycle, the coal prices cycle, they were more comfortable. So that's why the September quarter actually had a more favorable scenario in terms of dye intermediate production and business.
Okay. And sir, onto the pricing side, so have we not witnessed any increase in imports from China? Because still the demand in China continues to remain weak. And they were the largest exporter of dye intermediate like vinyl sulfone and H acid. And pricing almost remained stable on quarter-on-quarter basis. So have we not experienced any increasing imports or any sort of such?
Routine imports happen, but there was not any. Though you are right about the local Chinese demand. What we hear about is a little weak and uncertain right now. But as far as intermediates go, there are no extra imports that is coming in, even currently, I would say. So that's why this intermediate demand, it's quite stable right now here, local demand. And there is no extra pressure of any Chinese import product.
Is it also, sir, because they are operating at lower utilization levels, and if suppose there is an improvement in demand in China and in other countries, they can further increase the production and increase the exports? Can this be a thing which we should watch out?
No, I don't think so. If the demand improves in China, then obviously they will cater to that market rather than exporting all the way to India. And I think their production levels are also not very weak. I think they are also doing quite in terms of numbers. I think all the big plants are operational. They are doing quite normal volumes at the moment.
Okay. And sir, into your chlor-alkali business, caustic soda, so prices like last quarter only they had witnessed record low level, and this quarter also pricing continues to remain subdued. So what is that factor? Like you had mentioned that the improvement in demand from FMCG could be like the leading driver, wherein the chlor-alkali business could improve. So currently, like for this quarter, that has remained subdued, and that is the reason why prices have not gone up, and it is anticipated that price might go up going ahead.
So going ahead in a longer run, we are linking it with the Indians' GDP growth. And overall India's agrochemicals, pharma, specialty chemicals, other chemical space, even textiles, even alumina. These are all the consumptions where we are witnessing a growth cycle. There are a lot of investments coming up in this space. So and with the Indian GDP growing, overall country growing, overall incomes of the citizens growing, I think we see more spending, and because this has wide application. So in a long term, what we believe is that we are going to witness good demand. And in north there are very very few plants. So where in western part of India there are many capacities, and it gets crowded sometimes. But in north, there are limited capacities. So the opportunity is also good.
Okay. And sir, just so last quarter, so Mayur sir has highlighted the fact that we would be getting some benefits onto the incentives front. So from which quarter this would start?
It is not yet certain. We have already applied, but it's a government. So how much time they will take, it's uncertain. But we are expecting by March the approval should be there.
And sir, what would be the run rate of incremental EBITDA per quarter?
This will accrue from November 22, and what we are expecting about 20 crore per annum, rough estimate as far as incentive, both electricity and the GST benefit for the Punjab division.
Okay. So just one last question onto the demand. So pretty confident onto the dye. So how is the current demand of dye stuff and oriented product exporting currently, and how we see increase our exports of dye stuffs?
I think for a short term comment, dye stuff is still witnessing a little weaker demand, mainly because of the European war in the Europe and US inflation problem. So we don't see any immediate major increase in the demand coming in for dye stuff, but we are doing decent volumes. But at the same time, the overall basic chemicals and other input cycles have stabled a little bit, which is giving us a little comfortable working manufacturing. So dye stuff I think will still take some time to increase in good double-digit growth.
Okay. So, sir, for FY24 and for FY25, that could be flattish or a high single-digit growth.
Yes, FY24. So going ahead to the second half, it can be flattish, yes. But FY25, I mean, it really depends on how geopolitical what all happens in the world. It really depends on that. But I think in 2 or 3 quarters we should see some good improvement.
Got it. Thank you, sir. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. A reminder to the participants on the conference, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Rahul Jain, an individual investor. Please go ahead.
Yes, thank you for the opportunity. So can you shed some light on the PNCB, ONCB market in India? What is, the proportion of imports that we use in the country versus domestically manufactured?
So there is a good size of imports that happen in India. There are 3 other companies that produce PNCB, and their volumes are about 1.75 lakh tons per year. At the same time, there is also 50,000 plus imports that happen across India. So at the same time, I'm only commenting about PNCB right now. Our total capacity is 60,000 tons plus, but that includes other 4 products also. But the main product will be PNCB. So with the main product, our target is to penetrate into our existing customers. We also have a very solid customer base into pharma, into agrochemicals, and also replace some of the imports. So looking at our existing customer base, we have more than 85% of our volume is already, I would say, is going to be sold in our existing customers, and we also have about 15% of captive consumption. That will also play a key role, and plus then there is a good export to replace exports is also a good opportunity.
Oh, all right. Okay,
Thank you. The next question is from the line of Aditya Khetan from SMIFS Institutional. Please go ahead.
Sir, when we look at the first half performance, so relative shows.
Sorry to interrupt, Mr. Khetan, your audio is breaking up.
Hello? Yeah, now it's audible?
Yes, sir. Please proceed.
Yeah. Sir, onto the first half numbers as compared to your H1 FY23 numbers. Onto the profitability side, so the numbers remain quite subdued with a profit of only 3.5 crore for H1. And also onto the EBITDA side also, there has been a sharp decline. So, sir, like how you see second half, there should be a material improvement since you have already stated that the dye stuffs might remain flattish and dye intermediate also have now reverted to the normal levels. So we should see a flattish second half, or there should be a major improvement. And going into FY25, so which are the factors like which should improve our EBITDA levels or top line levels from here on?
Yeah, from this level, as you have experienced, and we have also declared the data, dye intermediate business is slowly and gradually stabilizing. So the quantum has improved and prices are also stable. So there is a possibility that some improvement should be there in the prices of dye intermediate, and gradually it will follow in dye stuff also. So our old model, that is basic chemical, dye intermediate and dye stuff, should start performing better going ahead. So we are expecting definitely somewhat betterment in second half. But to quantify is difficult, but not in a major way. But there are certain areas what we are taking steps internally, that is to reduce our fixed overhead, because some of the plant which were working fully in the good time, now it's not viable to work over there. So we are identifying that, and gradual process is on. So over a period of time, we are targeting to reduce about 25 crore, 22 to 25 crore of fixed overhead reduction in the company as a whole. And another area, as we mentioned, that is about 20 crore of incentive that will become available to the company from Punjab government. So these two are the area where we have a decent visibility and we are not dependent on any outside parameter. At the same time, what we are experiencing and what we are listening from other company and industry players, that worst part is over. Without this current quarter, there are certain things like we need to have a closure of sulfuric acid for 1 month, and there is Deepavali as well as Christmas. But overall mood or scenario, if we look at, that is improving, and there is no threat from, say, China. Last year, in China, prices of basic chemical were very low compared to India. Now in India also, prices of like sulfur, caustic, etc. are in parallel with China. So there is no threat from China, and there is a level playing field between India and China now as far as dye intermediate is concerned. So yes, gradual improvement we are experiencing, not in a very big way, but some improvement has to be there.
Okay. And sir, this net debt figure which you have given of 800 crore, so in this we have factored in the incremental debt we would be taking for benzene derivative, or like there would be like further increase into this net debt figure from here on?
Yeah, this is the date at the half year end, and there will be some increase by about 75 to 80 crore, which is undrawn limit. At the same time, there will be repayment of about 50 crore in the balance quarter. So there would be maybe hardly 20-30 crore of improvement. So at the quarter end or the year end, a figure may be between 800 to 850 crore of net debt.
Okay. And so like onto the margin side, so like for the last 7-8 quarters, we had witnessed a very subdued margin performance in very low single digit, ranging from like 4% to 7-8%. And sir, since we are the backward integrated player into dye stuff and having a very decent market share globally, so like when can we see that material improvement into margins from this high, from the low single digit to around at least mid of like a 12 to around 13% margin? What would be the driving factor like earlier which Bodal chemicals used to get? So any like how shift can be there, or like we would be at the same levels for the next few years?
Last 3-4 financial years, there has been too many other outside factors, especially COVID and this European war that affected us again, this current scenarios where US, Europe, Middle East all are going through some issues. So due to all this, the demand, especially from the textile space, has been very inconsistent. And so we are not able to consistently perform. Yes, we do have the integrated model. We do have a substantial share in India and also a sizable share on global map. But due to all these outside factors, we are not able to consistently, perform. So I think going ahead, we will. That is our internal target. Whenever the times are normal, the demands are normal, I think our business model with all the integration, it should be able to perform at least 12-13% EBITDA levels. And with the addition of chloralkali and benzene, we are looking to even push it more towards 14-15%, starting from FY25.
So chloralkali, in terms of our volumes, so it has nearly reached around 80-85% utilization level. So still, sir, this much share of increase in chloralkali also has not been able to shift your margin upward, at least till date. So in future, sir, how that can be a material driver for your margin change?
So there is still room for improvement in the volume. Today we are operating at around 80%, and we can still take it another 15% more, and most likely in 2 to 3 months' time we are going to have a good 15-20% improvement in the volume. So that should add some little bit to the margins. Also, internally in that complex, we are adding more pipeline buyers in terms of chlorine and hydrogen. That is also going to make some difference, and it is going to give us some more realization. We also made recent changes of boilers where our energy cost will also come down. So there are still few more factors which are yet to contribute to the optimum level. So I think going ahead in another 3 months or something, I think all these factors will come into the play, and it should give us additional EBITDA of 20-30 crores from the chloralkali business.
Okay. Thank you, sir.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is the line of Rahul Jain, an individual investor. Please go ahead.
Can you elaborate on the situation on ground? Have smaller units closed down because of the situation last 3-4 years? And how is the supply situation in dyestuff panning out right now?
Can you please repeat your question?
So my question is, how do you see the situation on the ground with smaller units which are not integrated like yours? Have they closed down in the past 3-4 years because of the terrible situation in demand?
No, the smaller units have actually not closed down, because what is happening is, because of this global uncertainty, we are integrated, yes, but then there is also material that started coming in from China. And because even for integrated players like us, we are not able to sell or maximize our dyestuff sales, so then our intermediate is also available for other competitors. So it is not making them go out of business, but they are also, I would say, surviving. And because in dyestuff there are many products. So because there are many colors and different shades, so there is a wide number of products. I would say more than 300-400. And at the same time, there is also entire globally, there is a textile consumption happening everywhere. So due to that, even the smaller players have their own product range. They also have their own market share. It could be all the way in South America. It could be here in South India. It could be in Bangladesh. I mean, it's a very, very big market. So still, industry has not really reached a point where the integrated players can force the smaller, not integrated players to go out of business. It is not happening.
Okay. And sir, could you please quantify once again the impact of cost saving and the incentive exactly for my benefit?
Yeah, see, there are two parts, as I was discussing earlier. We are eligible for incentive in terms of waiver of electricity duty in Punjab. In Punjab, our electricity expense per month is almost about 12 crore, and it includes about 15% of electricity duty. And once we get this permission from government, our almost about 10 to 11% duty will get waived off. So we will be saving almost about 1 crore to 1.25 crore every month as far as electricity duty is concerned. And second part is the GST benefit. So there is a formula given by Punjab government wherein almost 25% of the GST paid by a company will get reimbursed by government. And in this case, where we are producing chlor-alkali, the value addition of GST is very big because our raw material is salt, wherein GST is not involved, whereas our finished good attract 18% GST. So there is a huge gap of input credit and output payment. So because of that, also we will be benefited. And for that, we are estimating about 50 to 75 lakhs per month, depending upon the prices of chlor-alkali. That benefit will accrue to us. So this is one part. And as far as fixed expense is concerned, if you follow the company, then we did some capex in the year of 2017 and 18 when we did the QIP. So at that time, we have increased our die stock facility to double. At the same time, we have acquired other two subsidiary company. One was Prion and then SPS, which later merged with Bodal. But due to this all uncertainty during last 3 years, these capacities were not been fully utilized. And as we build the capacity, our overhead has increased. But now there is a time we need to reconsider this fixed overhead. And that is what we are working. And that's why we are targeting, and we feel that we will achieve a reduction of fixed overhead to the tune of 22 to 25 crore gradually. I hope I made your point clear.
Yes, sir. That was very helpful, sir. Thank you.
Yeah, thank you.
Thank you. Reminder to the participants, anyone wishing to ask a question, may please press star and 1. If there are no further questions, I now hand the conference over to the management for their closing comments.
With this, we conclude the call and would like to thank everyone for joining us today on this evening earning call. If you have any further questions, you can contact us. Thank you so much.
Thank you.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Bodal Chemicals Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.